Well, we're back with you here on the Market Day Report, and we're going to take a look at our grain market activity and our livestock trade with a little help this time around from Chris Swift of Swift Trading. And he is based right here in Nashville, not too far from our studios here at RFDTV. Always good to have you come in. Thank you.
Good morning.
Appreciate it.
Yes, sir.
I trust you had a good weekend.
I did indeed. A lot of activity over the weekend.
Yeah, all kinds of activity from all kinds of angles. It was a solemn weekend. It was a busy weekend, and a lot of harvest activity picked up, I saw. And I don't know what you're hearing from your clients. Probably diving in there.
Oh, absolutely. All the combines are rolling 24/7 right now while the weather's good. So,
what kind of results are you hearing?
All of them really good so far, because nothing has gotten up into the northern part where the drought area is. All we've heard from that is just what they've done for the silage cutting there. But other than that, we haven't heard anything up north.
Fingers crossed.
Yes.
Hopefully everybody has a good and a very safe harvest season here. Well, let's take a look at what the market is doing right now. We'll begin with our corn board and our quotes provided by bar chart. And we have December corn backing off here today, Chris. We're down 7 cents at 5.10 per bushel. We had some overnight sales announced again this morning, and it involved soybeans. It was a sale of soybeans that went to unknown destinations. There was no particular buyer noted. 132,000 tons is kind of the usual amount that we used to see all the time. A lot of times people just interpret that as meaning China, but you almost have to put that in parentheses. But for now, it's unknown. Doesn't seem to really want to help the market too much. Let's see what the soybean prices are doing. Well, we're down 3.5 cents in November at $12.83, but I will give it the fact that it is 6 cents off of its earlier low this morning. Still about 11 cents from our overnight high. But given the reversal we had on Friday and now the turnaround to the downside here on Monday, does that kind of cancel each other out, in your opinion, on corn and beans now, or what?
I don't think so, because we look at the dollar was really strong this morning. A lot of the aspects that we've seen from harvest pressure, things. So the market is really actually in a pretty pronounced position where it should really be going down. And although it is down slightly, it's not down near as much as I think it would be if we were really headed into a bear market.
Well, let's check in on the wheat trade and see what Chicago wheat is doing this morning. We're down there too, 5 1/4 lower at 683 1/4. And on the Kansas City wheat, we currently have the December contract 3/4 of a cent lower at 681 3/4. So that one is just barely lower at all compared to the Chicago. It has quite a bit of pressure here this morning. Now, if we take a look at our spring wheat market in Minneapolis, we're down 7 3/4 at 871. Interesting, the spread dynamics at work here in the wheat exchanges for some reason today. What do you think?
Just a different variety. So we know that the spring wheat, I can only assume that by having stopped going up in price, that over $8 is quite a hefty premium for a lot of the end users, the pizza crust makers, stuff. They look at that. And we know that we can swap some varieties for that other spring wheat there, but we still need the blend in there to get that gluten factor that they want from it.
That's true. Now, on the dollar value for the U.S. dollar index, we were watching that earlier. That could be a factor here, too. It is higher by 255 points this morning at 92.845 on the September futures contract. So that's probably putting a little pressure on the wheat by itself. We'll come back in just a moment, and we'll dive into our livestock trade. We'll start with the cattle, go to the hogs after that, right after this. Well, we're back with you talking with this guy right here, Chris Swift of Swift Trading in Nashville. And Chris is a well-known follower and contributor and analyst on the cattle market. Let's take a look at what cattle markets are doing this morning with our quotes provided by bar chart here. A little weakness across the board here, Chris. We did not have a good finish last Friday on the cattle complex. A little follow through selling today. We have the October down 27. We're at 123.15, and December dropping 45 cents this morning. And now 47 lower at 127.75. The feeder cattle market really having some issues. We have the October contract down $1.05 once again. We're at 156.67, and this is in the face of lower corn. Why?
It's all basis. So the feeder cattle index declined sharply on Friday, down $1.83 to 155. All the futures markets settles to the feeder cattle index. So as cattle feeders are losing interest, even with a little bit lower corn. That feeder cattle price is still extremely high when you look at the break-evens for fed market prices out into the future. So I think that's part of it. And then this morning we got a sharply lower open because of the JBS fire that they had in Grand Island, Nebraska this morning. So that's a big plant, and although rumors that I've heard is it wasn't that much damage and could be back online before tomorrow, it's still another example of how not necessarily antiquated, but behind we are on our packing and processing abilities.
So have you heard any details as to what the fire was about, what caused it?
I have no idea. Anything I say would just be speculation, and it's just rumors that I've heard.
So yeah, that is a sizable packing plant, and this is at a time where we really don't have room to lose any capacity in the...
No, last week alone we were down just because of the holiday. So we slaughtered fewer cattle last week. Now we got fewer cattle that we're going to slaughter this week. And even if it is back up and running, they'll have some issues and glitches, and it's hard to get a fire to go out and then just start running back it again, because there's no telling what little bitty things that you can't see behind the curtains or in those wire boxes, junction boxes that have been damaged.
And isn't that the whole reason why the cash market has lagged, just because we can't get them through the packing plants fast enough?
Absolutely. You know? And it ranges, everybody gives their own reason for why, but clearly it seems as employment is one of the biggest issues that we have, because we're all suffering that. And we looked at the grocery stores this weekend, and a lot of the shelves are not necessarily bare, but they have big holes in them where they don't have the employees to go fill it. We see the trucks parked up back there, but they just don't have the employees there to fill those stock those shelves back.
Let's look at our lean hog trade and see what it's doing. Remember, on Friday, they were down over $3. Little follow-through selling there, too, today. October down 47 cents, and we have December down $1.10, right at $75 even, but that's $1 off of its earlier low this morning. But it's also about $1.50 off our earlier high. So, wow, what a wide range already in the lean hogs on December, almost $2.50 wide. Chris, thanks for coming in.
Always.
Appreciate it.
Yes, sir.
Yeah, we'll see you real soon.
Right.
Chris Swift, Swift Trading in Nashville. Janet, back to you.